And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And good afternoon. Nice to see you all seeing us this afternoon. I'm Brent Clanton, the Executive Director for the Lance Roberts Podcast, and we're trying an experiment today. We've often joked about having a Lance in a can or Lance on demand. So we're going to try that theory this afternoon along with Danny Ratliff, CFP, and Richard Rosso, Director of Financial Planning. And I thought it'd be probably a good idea if we'd start the show off with a look at how Wall Street did today, Danny.
Yeah, so Wall Street numbers are still settling, but looks like everything was on the up and up. Dow was up 56 points, up 0.21, S&P 500 up 2, and the NASDAQ up 25. Nice to see them all going up in unison. Gold was down a bit on a stronger day, down 4.8 or 0.39%, and oil had a fairly strong day, up $1.08. So the big story of the day today, though, I think there's two things, really underlying factors, is one, interest rates, two, this market is not being led by all stocks. A rising tide is not lifting all boats. But
today was one of the days where it actually looked encouraging.
It did.
There's been a divergence. People, the more astute traders I talk to, they go, "What's going on with small cap stocks?" So we've seen small cap stocks pull away as large cap stocks have continued to roar. And even on the large cap size, it's been the Dow, which, by the way, is not a really good representation of the market. You've really got to look broader, S&P 500 and so forth. But today, I have to admit, I mean, even small caps had a bounce.
They did.
So we definitely had a better overall day today when it comes to markets in general. Now, I know where you're going to lead, because in spite of the fact that markets have done well, we've seen bond yields really take intermediate-term bond yields as we focus on the 10-year, but across the board, we've seen bond yields increase quite a bit today.
Correct. And this is one of the difficult parts, especially as you look at your portfolio. Dow closes at a record high today, yet you may see your account and things aren't going up the way you would expect, because we also saw rates spiked, and rates spiked pretty substantially just today. We saw them jump all the way up to 3.15. I'm not sure exactly where they're closing it at the moment, but I'm going to bet somewhere in that ballpark, 3.155. That's a pretty substantial jump. That's almost 10 basis points. So what does that impact have on you as an investor? And I think this is one of the big things, Rich, that it's very difficult to understand, that when these rates rise, it's going to put downward pressure on your bond prices, right?
Well, we're going into a period where bonds and stocks are departing. Their relationship is getting severed. They were moving together for a while, and people were seeing green or appreciation in their bonds as well as their stocks. You've got to now realize that you're not going to see that here. You're going to see your existing bond holdings pull back and do the opposite, perhaps, of what your stocks are going to do. So the way you own bonds, now, if you're in a 401k,
yeah, you're stuck a little bit.
Right, you're stuck. So remember, in a mutual fund, there's no maturity date. So you're seeing red. And again, even that, I have to tell you, is suspect, because I would dare for you to say, when you look at your bond fund in your 401k, right? You've got an intermediate term fund. You go, oh my gosh, I am down $2,000, right? Well, maybe not, because that red and green is not actual performance.
That's correct.
Figure out or take a look at, what is my actual contribution? How much of my own money, not dividend or income, how much of my own money have I placed in this bond fund? So I went over this with somebody yesterday. In his 401k, he's down $3,000 in his bond fund.
Correct.
His bond fund's worth $53,000 or so. When I went back and looked at his original, just his contributions into this bond fund, they've been $45,000.
So he's done very well.
So he's like, oh, well, why is this number give it so misleading? I said, it's not misleading. It's just that it's more of a cost basis number. It's not your total return.
Well, because they're reinvesting back into the fund,
right? So
correct?
I said, you actually have put $45,000 of your own out of your own pocket into this. It's worth 53. It was 53,000. It was worth. So, and he feels better about it. And also keep in mind, even though you're seeing depreciation, Guess what your portfolio manager is doing? Swapping out into higher yielding bonds.
Correct.
So generally speaking, as the price of your bond fund goes down, your yield should actually be going up. So keep that in mind.
And this is a give and take, right? Because you're going to have to wait some time. And look, this doesn't mean that forever. Like I've gotten some calls here today, and even yesterday. Well, why are we even in bonds if we're seeing rates rise and we think they're going to go up? Well, there's a couple good reasons, right? One,
well, let's take a step back because I think everybody knows that in a bond fund, no maturity date, right?
Correct.
If you're in a 401k, you have a very magical investment in some ways that are not available to you outside. It's stable value.
Correct.
So what's happening with the yields on your stable value? And you're not seeing any principal fluctuation.
They're going
Are
up.
you seeing 2.5%, 3%? That's really for safe money in
right.
your 401k is not bad.
And you can almost use that for a bond proxy because
Absolutely.
there's no volatility in
You
that.
won't have to worry about this green and red thing.
That's exactly right.
Brent just gave me a peace sign.
So one of these things, look, if you're one of our clients, if you're
Yeah.
out there and you're looking at your portfolio and you're not one of our clients, give us a call. We'd love to talk to you about it and kind of walk you through what the overall, why it makes sense to own bonds and what we anticipate happening here. Because look, you think interest rates are going to rise for a bit. We're going to get some pressure here as rates begin to rise. They're going to put pressure on the consumer, on corporations, and it's going to start taking money out of the economy, right?
Absolutely. As rates rise, there's more pressure, more liquidity that comes out of the market. But if you're an investor, and if you look at demographics in the country, except for Danny, we're all getting older.
Oh man, I
you
don't know.
You got to keep in mind that you can ladder bonds or own bonds that mature in 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, and you're going to get your money back, right? I mean,
yeah, a
we
healthy.
can talk about that in the next segment, but owning bonds, don't worry about what they're trading at as far as if high quality. Even treasuries are going to lose money, okay? If you can buy a 2-year treasury, 100% guaranteed, you're going to lose money if yields go up and you own that bond and go, wait a minute, I thought this was guaranteed. It is if you hold it to maturity.
Well, and look at your yield to worst because that's going to really give you an idea as far as what you had. I know we wanted to get to a little bit more information for you today, talk about the broader market. We'll get to you next time. We are going to come back with Lance in a can.
We got Lance in a can.
Lance on demand.
Oh.
All right.
We're going to talk about the market's irrational exuberance and 7 impossible trading rules.
Impossible.
Impossible.
Goodness.
It's impossible.
I can't wait.
It's coming up next on the Lance Roberts Podcast. Thanks for watching us. Check out our website, realinvestmentadvice.com, for all the blog posts and past video casts as well, right here on the Lance Roberts Podcast. Don't go away.
Want a longer talk with Lance about your money? Request a personal one-on-one at lancerobertshow.com.